All right, hey there, everybody. Christopher Franks with Texas West Capital, running just a bit behind today. A lot of stuff going on, but it is Friday, the 10th of September, 2021, a few minutes after 11 a.m. Central Standard Time, and I'm coming at you live from Boerne, Texas. Beautiful place to be. Man, hopefully you guys are doing well. So glad to see y'all. We've already got some questions about the giveaway. I'll be putting up a page. I hadn't done that yet on the website explaining it this weekend. But to let y'all know now, TWC, Texas West Capital, is 4 years old as of yesterday. And we have grown a lot. We offer so much more than we ever did to begin with. And we continue to try to add more while reducing the cost. And so we wanted to celebrate. And so I've come up with this year-end giveaway kind of celebration to celebrate through the end of the year. And so what it is we've got right now, I've been able to get my hands on 4 PS5s and 3 Xbox Series X's. If you've tried to get them, you guys know how notoriously difficult they are to get because of the chip shortage. And so I've spent a lot of time working on getting them. I've got at least those right now. I'm going to be giving away those. I'm going to be giving away $5,000 in Bitcoin. I'm going to be giving away 10 biannual memberships for Tier 3 for TWC and 10 annual memberships. And this is just the beginning, guys. If we can get enough exposure with this, get enough people jumping in on this and getting excited about it, I'm going to add even more. But basically the way this is going to work is weekly from the week of October 15th. From that week on, every week I'm going to be drawing to give away one of either the PS5s or the Xbox Series X's. Okay. Now, and so that's at least, 7 weeks there. So that'll take us into December. Even if you're not interested in gaming or whatever, if you've been paying attention at all, people are out there selling them for twice what they cost because they're so difficult to get. So, hey, maybe you win one and you just put it up there and sell, which you might be able to sell for even more with the holidays coming up and everybody trying to get their kids one of them and not being able to. So there's that. We're going to be multiple giveaways for Bitcoin. I've got $5,000 worth of Bitcoin right now to give away. If the follower count on my Twitter account jumps over 100,000, I'm going to add even more Bitcoin. I might double that at least, maybe. We'll see. What else? Like I said, we got the memberships we're going to give away. I've got other things that I'm going to look to give away as well, and we're going to extend this to all our social media stuff. We're really trying to get out there with social media and we've got all these accounts and trying to get them going. So we've got an Instagram account, we've got the YouTube channel here, we've got the Twitch channel here. We have a Facebook page, which I finally got back from Facebook. It's just such nonsense, man. Everybody's out to kill crypto, right? I've been fighting with that for probably almost a year now. Finally got it back, so we're going to start posting there again. And following us on each one of those, subscribing and following on each one of these will keep you alerted to possible giveaways that we're gonna have for each social media account that we have. So if you're on all these multiple social medias platforms, man, it behooves you to go ahead and follow us, subscribe to our channel, stuff like that, so you can keep up with possibilities to win stuff. So we're going to do all of it. It's just going to be this huge blowout through the end of the year. I've got a lot of stuff coming in. We've got a newsletter coming up. The first issue will go out on Monday. It's called The Market Breakdown. It'll be a weekly macro look at all the markets that we usually cover. Looking at the news that's in there and what it may or may not mean for it. There'll be a little education in there, some setups, stuff like that. It's free, though. I don't have any plans to charge for it at any point. Gosh, so much. I'm going to be producing smaller, short videos, maybe 5 to 10 minutes, multiple times throughout the week that everybody will be able to access for free on different subjects and different things. We've got a couple of website properties. I've got a portfolio of 50 plus domains that I'm going to start putting into use. So we're going to have a lot more out there and information and all this education stuff for you guys to really kind of help you become better traders. So, man, oh man, I'm so excited. Can you not tell? I hope you guys are excited as well. But yeah, so basically the main giveaway right here is on Twitter there. And what you need to do is, if you don't have one, just create a Twitter account, guys. I mean, you know, it costs you nothing to do. It's 5 seconds, whatever, to do it. And then basically just like the post. Let me go ahead and pull this up over. Let me show you real quick here. Oh, there we go. And so basically, what you're going to need to do is I have a post here. Oh, it's up here at the top. It's pinned to my post up here at the top, right here. And so all you need to do is like it, you know, retweet it, tag 3 people in it. You know, they don't have to be friends. They could be enemies if you want, but tag 3 people in it. It could be 3 people you don't know. Just tag 3 people in it. And then follow us here. So, you know, come up here, hit the follow button there. And then, of course, subscribe to our free newsletter. And that'll get you that entry into all this. And like I said, if we get a significant follower count increase as this continues on here, I'm going to add more to this to give away. I'm still trying to find, trying to get my hands on more Xbox Series X's and PS5s. And so if I do, they will be added in regardless. So, you know, like I said, some people, you know, a lot of us are gamers out there. So we've got that reason. Maybe your kids are gamers. You've got that reason. They're really difficult to get. So it makes it really kind of special to give away. But even, like I said, even if you're not, man, the money you could make by winning one and then selling it is pretty great as well, because the demand is so high. So lots of possibilities, lots of stuff here, guys. Hey there, Bill. Good to see you. Hank's checking in. He says, F1 qualifications, so I'm only half here. Is that the bottom half or the top half? Is that the left half or the right half? I need to, inquiring minds want to know. The front half, the back half. Cue the action. What's up, Esteban? Always good to see you, my friend. Evolution, what's up, buddy? Brian Rilling checking in. Yeah, so please explain the Xbox giveaway. There I did. Hopefully there's no questions on that, but always, if there is, you guys can ask. Let's hear State of Crypto. What's up, buddy? It is going great, man. I'm feeling great. MFN is here. Always good to see him checking in. He's been with us for quite a while, as has Data following here. Bianca, hello. Good to see you. Thank you so much. Mark, I hope you're doing well. Let me see here. Bill says, for non-USA residents where the consoles won't work, is there an alternative prize? Right now, there isn't. Like I said, if you win it, you can sell it, right? There's a lot of Americans that are greedy to get these things. But I'm actually, I had a few comments about that, a few questions about that. And so I'm going to look this weekend and see if maybe there's an alternate prize that I can do. If you don't want to, you know, if you win the console or whatever, and you're outside the U.S., you know, where it doesn't work, and you know, to give you instead there. So yeah, I'm looking at that this weekend, guys. You know, again, I'm always doing everything I can to give you guys what I can and to make it as fun and as easy as possible. So yeah, I'm going to check on that. Onyx King, what's up, man? He says, I want all those 10 annual memberships. Be set for a decade with us. I love you, man. Good to have you here. Michael Williams, thank you, sir. Good to see you. Let me see here. Mark, yeah, I'll take a check there later, buddy. I'll check on you. I think you did good. I think I saw that you did it. So yeah, I'll check on it there. Hank says this left half is here. Oh man, let me see. Who is this? Is that George? Yeah, see, I don't have my glasses on at the moment. So thank you for the happy anniversary there. But anyway, guys, you know, really excited about all this. And if you follow us, a lot of people have been with us for, you know, since the beginning, been with us for 4 years now. And even of those that haven't, many of them been with us 2 and 3 years. And they've seen how much we've grown in what we've been able to offer, and how we continue to do all that. And how I'm always pushing the limits on what I can do for you guys, while also trying to maintain a very, very low entry price point. And I know, you know, that's always relative. But it's what I'm talking about is in terms of everything that I provide as far as what TWC does, the content, the amount of content, the type of content, we are by far well ahead of everybody else out there. Normally, you're going to have to pay a lot more for everything that we do. And I intend to keep it that way and try to get the price even lower. One thing that helps with that is memberships, guys. As our membership grows, I can basically dollar cost average, right? So as our membership continues to grow, hits certain milestones, I can bring down that price just because of that, because I can make lesser per person and still be able to provide you guys with the service that we do. So anyway, lots of great stuff going on here. I hope you guys are excited. Duff says, I've been trying to get my hands on the PS5 for almost a year, and you somehow have 4. I'll tell you what, it's been fortunate. I've been pretty fortunate. It's been tough, though, guys. It's been a lot of work to try and get it. Most of the times I've tried, I haven't been able to. So, again, I've just been fortunate that I've gotten 4. The Xbox Series X was a bit more difficult to get. I only got those 3 recently. As a matter of fact, just so you guys know, one of those Xbox Series X's was one that I bought for myself and my son. And I'm actually putting that in there just in case I can't get another one. So I haven't opened it or anything. It's still sitting there. Just know that if I can't possibly get another one, unfortunately, I will not be having one myself. But y'all have a chance to get it. So, yeah. But anyway, guys, make sure you're doing this. Follow us here. That newsletter, I think, is going to be really great. It's going to have a lot of great information in it. Like I said, some trade setups and stuff like that. So you can join us here at howtotradetowin.com. By the way, we're going to have a special on Tier 3 access there in the first issue of the market breakdown there. So be sure you jump on there to Twitter here and do our little thing right here. It says start reading. Just click on that. It'll bring you up here to fill in. Matter of fact, I'll give you guys the link right here, so that way you can get it in case you don't have Twitter there. But that way you can get that sent to your email box. And like I said, we'll have some a special for Tier 3 right in there as well. Oh, man. Antonio, yes. What's going on? Been here since the beginning. Just what a community. Yeah, I agree. Our community has just been absolutely amazing. I'm so humbled by the great people that we have with us, guys. And everybody's always, nervous about, well, is it a scam or whatever? Because there's a lot of BS out there. And I guess, I can tell you all day that I really believe that what we do is great and we've got a lot to offer. But at the end of the day, you could always see that as I'm just a guy trying to sell a service, right? But to back up what I say, we have a huge retention rate. People that join with us tend to stay well over a year. And so to me, if I'm somebody looking to do something, I want to see, well, are people sticking around? If it's a service, are people sticking around? And they are with us. They're absolutely amazing people in there. So many great traders. And it's great. And it really works for TWC because we've got a lot of traders from overseas, from over in the UK and Australia and Japan and Czechoslovakia and Poland and so many great places. And so they're able to continue the discussion even when I'm sleeping, because I have to sleep at some point. I don't sleep a whole lot. I work a lot. But, they're able to keep that conversation going, keep their eyes on what's going on in the market, and it just really turns out to work really well. So, yeah. We'll draw the winners on the stream. Yes. That way you guys can see it being done. And we'll mention it there. And that way, hey, there you go, right? Fix-a-Fin checking in from Switzerland. I still love saying that. Good to see you. So like I said, guys, you can join us at howtotradetowin.com. We'd love to have you here. As I also mentioned, we are developing a few other web properties, which will come online here over the next few months. And I'll let you guys in on those as we do them. And like I said, the idea is just to get you more education, more content, as much as possible. ESCLT, what's going on? Good to see you. Oscar says there's a new version of PS5. Plenty in my country here. Yeah, they're difficult to get over here. I don't know. That US-based version, I guess, is really difficult to get. If you can't use the PS Xbox, you can just market sell the PS Xbox Bitcoin pair. Let me see here. Apex from Lake Villa, Illinois. Good to have you checking in, man. Oh, man. Gosh, you guys are really great. Really great. Bill, like he said, has been with us pretty much since the beginning. He says, I can verify this is by far the very best learning resource for trading and market and financial analysis. Outstanding. Yeah, and that's great, because I have never joined any kind of group or company or whatever like that. So the feedback I get from y'all helps me continue to make what we do better. In case you ever wondered if it makes a difference, the things that you tell me, it does. It does. And if at all possible, we're always open to suggestions, and we always try to implement some form of them. So yeah, always trying to do it. Wadar21, what's up? Diego's here as well. Oh my gosh, dude. Had a tumor removed from my throat, now back home from the hospital. Everything went well, it seems so far. Oh my gosh, man. Well, hey, I hope you have a speedy recovery, man. That's scary. Man. But glad you're all right, man. And hopefully it continues to get better there. Wow. Let me see here. Okay. Oh, this is where the goons yell in the chat. Show us a winning trade. Laugh out loud. Yeah, well, you guys know if you were following me, right? I mentioned an entry here for USD CAD long this morning. Right here about 2 hours ago. Oh, wait, no, I guess more than 2 hours ago. Something like that. Yeah, about 2 hours ago, I guess, or so. USD CAD entered in there at, where is it here? 1.25905. And where are we at right now? We're 1.25. Where are we at? 1.26356. So about 45 pips were up this morning on that. So it was a small trade, only 168,000 as you can see there. So right now it's around $600 or so. But definitely not a bad trade at all. I'm just going to be busy today. I didn't want a large position that I had to kind of watch. So yeah, doing well there. There's the winning trade already, right? Man, Diego, you're definitely welcome, my friend. Definitely don't want anything bad happen to you, buddy. So hopefully everything will continue to go well, man. Let me see here. And Diego, like the guys are mentioning, he's been active all the time over there in the Bitcoin analysis channel, TA channel over there. So in Discord, great stuff. All right, so here we go, guys. So I've been, I've kept Discord updated with multiple possibilities, because at the end of the day, guys, big picture is that we're just moving sideways here since the drop. Okay, we were sitting here between this swing high that happened right after the drop, right up there about 137 and 48 cents, just shy of that 1 hour S1 pivot, and the swing low down here, which is at 423 and 49 cents. And so really all we're doing at the moment, guys, is just kind of churning sideways. Now, I had mentioned that, we could be doing this for a little bit here, because the market, after such a large drop in such a short amount of time, the market tends to get scared, and it takes a little bit for them to start gaining some confidence and start kind of entering positions a little bit. And so, this is expected. Nothing terrible about it. One of the possibilities we were watching was maybe that there's a triangle forming here. So, it is possible that the end is here, that this is, wave 4. But if it is, this has to be 1 up here where it says A, and then this would likely have to be 2 here. Now, let me just go and talk about that real quick. It is possible, and in that case, you can have this 1, 2, which will give you this wave 3 minimum target up here at 52,875. This right here, if that's going to be correct, this would likely have to be a 1 and then an A, B, C as a flat. Okay? So, if that's the case, how will we know if that's potentially what's happening? Because we will rally from where we're at above this wave B. And if we rally above that wave B, that invalidates the triangle. The triangle no longer exists, okay? And so in that case, this would be a 1, A, B, C is a 2. And we'd have a 3 right here around 48,916. That would be that minimum expected target. 5 would be right around the 1 hour pivot up here around $50,050, right around there. Okay? So that's only if this is a 1, 2, and then a 1 with a flat as a 2 here. Okay? But in order for us to say that's what's going on, it has to continue from where it is and rally up above that wave B. That wave B sits right there at 47,400. Now, the other possibility is this triangle. And this triangle suggests that maybe instead of being the bottom here, this is A down, and then we'll get So we've got A, and then we're looking to B, and then C. So for wave B, it's an A, and then wave B of B is a triangle. And then wave C of B will, again, target up here around, probably around 49, 745 to 50,000, this kind of area right up here under the pivot. And then wave C would come down, and my thought for wave C is potentially a target of this S5 pivot on the daily here, right there around the 50% retracement at 39,387. Secondary target being this big blue this big blue demand structure here, the EQ at right around 38,430. Okay, that's if we get this break up here and then it breaks back down below this area. Okay. So, I mean, that's really kind of what we're looking at. And you know, if you're new, you might be a little frustrated and go, well, what's it going to do? Nobody knows. Nobody ever really knows what price is going to do. We can make assumptions based on price action and our knowledge, but nobody really knows for sure what price is going to do. And when you're doing sideways like this, it's even less that people know, right? Now, the other thought here is that price will continue to break down instead of moving up here and eventually getting above wave B up here. Price will keep on coming down and drag down below wave A at 44, 423 and 49 cents. If it does that, then what my assumption is that this is A down, this is B up, and we're working on C down. And if we're working on C down, basically this would be 1, this would be 2, right? So then that would give us then a wave 3 of C target. Right down here, right above that S4 pivot on the 1 hour at 41,274. And wave 5 at the top of this demand structure here, right around 39,830 or so. That's only if price continues to break down here below wave A at 44, 423 and 49 cents, and it doesn't break out above wave B here. Again, that would be A down, B up, and then this is C playing out here. So for those who are frustrated and, you know, at the fact that we don't know what's going on, really, again, it's because we had the big drop and we've got sideways now. But what I've done here is I've given you the likely possibilities of what's going on depending on whether we complete the triangle or we don't and price just rallies up, or we don't rally up and price just continues to break down. Again, you know, if we're looking at this as a 1-2, maybe 1-2 here, what we really need to see is a breakout above this 51,467 and 80 cents. We need to see a breakout above that to add confidence to this count here, to this being a bullish count, to 4 being done, 1, 2, 1, 2, heading up here. All right. So that's, you know, that's kind of our level there that we want to see price break out of if that's what we're looking at. Now, my other thought is if we do get down here around this 50% area, I think it's possible that maybe instead of a 3-4 here, that maybe we've got 5 waves up here. And so then this is a 1 and then this becomes a 2. By the way, notice how this demand structure here, you know, the top of it is right there around that that higher volume node right there. Locally, we need to break out above this higher volume node. And if we can get above it, this node should work as support. It doesn't guarantee the price will continue up from there, but you will get additional support from this. Right now, we're below it. So this is going to work as resistance until we can break out above it, if we can, okay? So, you know, that's kind of like a visual on there if you've got VPVR, your visible range on here. Kind of showing you some confluence with the levels we're looking at and why and how they all kind of work out. Let me see here. Telluride says, my friends hate it when I tell them nobody knows. They think I'm hoarding my alpha. Yeah, right. I mean, you know, and that's the way it is. And I have to chuckle because we've all been there, guys. If you've been trading for any amount of time, or even if you're brand new, you know, you've been there, you've thought that way, you know, because when you first come in, you think that the market, that people should be able to tell you where it's going to go definitively, right? But that's how that's how everybody out there scams you. That's how they get you to just give them money, guys. They say, oh, it's definitely going to do this. I'm guaranteeing it's going to do that. And every once in a while, they'll be correct. They'll get lucky. They'll be correct. And the problem, that's the worst thing that can happen for new traders, because then they think, oh, you can guarantee what's going to happen in the market. And then you go shelling out all that hard-earned money for nonsense. Guys, it really is nonsense. I mean, all you have to do is look at somebody like, I don't have a very large following on my Twitter, I have 21,300 or so, right? But when you look at larger people like Brandt or Bollinger, they've been around even longer than I have, and they're large counting, and you can see what happens. They never talk about definitives. Well, Brandt sometimes, especially in things outside of trading, he does. But really, they tend to take a approach of, okay, well, this is what it looks like it's doing, and if it does, then we're doing this, right? But then you look at the responses they get, and people are like, oh, look, you're always flipping, you're always doing this, you're always doing that. Guys, to be a good trader, you have to be able to change your mind when new information comes in. Your analysis of the chart is only good so long as it continues to be correct, guys. Stop spending so much time and worrying about what all the other idiots on social media are saying or what they'll think about you if you change your mind. Don't let that keep you from changing your mind. If the evidence, if the information that's coming in now is glaringly different than what was expected, you need to change your mind. Stop staying in a losing position that you don't have to. Okay? And I say this because, again, guys, I talk to y'all all day, every day. A lot of DMs, a lot of, whatever. And I try to talk to everybody I can. It's difficult, but I try to. So don't ever feel slighted if I can't get to you, or if I don't get to you, or if I forget to get to you. It just, beyond everything that I do here in my own, personal life and everything, it's the more people you have, following you, the more difficult it is to kind of, respond to everybody. But I do try. But from all that, I know that this is something that bothers you guys. And even if you don't come out right and say it, what you say and how you say it usually results in it. It's usually what it's all about. And you have a lot of trouble dealing with that, which it makes you then do things that you shouldn't do as a trader. It gets you to get into a position that you shouldn't enter, or to hold on to a position should be out. Right? Stop letting social media dictate how you trade, guys. It is your trade. Trade your trade. Manage your risk properly. Trade your trade. And don't give two hoots about what somebody online says. Okay? As long as you are really doing well with that risk management, it doesn't matter if you're wrong. You'll be right. Okay? The goal is to manage your losses until you're right, because often when you're right, you can be really, really right. And it makes up for those few small losses that you have. We all get on streaks, guys. We all get on streaks. Sometimes they're great winning streaks. Sometimes they're not so great and they're losing streaks. But streaks happen. And if you get on a losing streak, the worst thing you can do is to continue to just jump in blindly real quick. Just take a step back. Take a few days away if you have to. Let your mind clear. If you can do that, you've got a lot better chance of seeing the chart for what you should see it for, rather than what you emotionally are revenge trading it for, okay? And that's so hard for me, because I'm always scared, if I step away from the chart, it's going to go up without me. Guys, most of the time it's going to go up without you anyway. You're going to get very little of that if you get it. Understand that if you want to trade, all you care about is that there is some level of volatility, something in which the price moves up or it moves down. You don't care about the direction, because you trade both ways. All you care about is that there is movement. And if that is your mindset, then it's not a big deal, whether you miss this huge move or something. If you are lucky enough, if you are fortunate enough to be a trader for 5, 10, 20, 50 years or whatever, you're going to miss a lot of big moves. But you're also going to get some. It's just part of what goes on there, guys. I keep telling you, I missed BNB. I didn't enter it, guys. I missed that big, beautiful run-up from when they came in, right? I missed Link from its opening. I missed it completely. We had members who made ridiculous money on it. I missed it. but I also made some. I did, you guys know, XRP. Huge for me. Huge for anybody, I think. Got in at around half a cent and rode that up to almost $3. And I didn't get in any small position on that. You know, I've ran up with XLM a few times. You know, and so you're going to get some, you're going to lose some, guys. We've been in huge Bitcoin moves. We got in there at, we got out at the top there, 2017. And then we had a big win getting in there around that 3,100 area where I was telling everybody you should probably be getting in. Ran that thing up to that June high in that area up there. You know, where we posted publicly, the chart said, hey, here's the top. And we were right. So, you know, again, guys, you're going to get some, you're going to miss probably a lot more than you're going to get. But it doesn't, you don't have to get every big move. That's the thing. You don't have to buy the very lowest price. You don't have to sell the very highest price. You don't have to get every big move that comes in. To be a successful trader is just to consistently profit. It doesn't mean you're going to profit every time, but it means over the long haul, you're profiting, your profits outweigh your losses. That's all it means. It means to get in, make some profit, get out. If you can do that consistently, you'll be well far ahead than everybody else out there who's trying to buy, who's trying to knife catch that very lowest price. They're trying to sell that very highest price, and they're always concerned about being in on the huge moves. You'll be well far ahead of them. There's no doubt about that. Peter, good to see you, man. Good to see you. Black Man's Guide to Bitcoin. Good to see you checking in as always. Let's see here. Let me see. Pixifin says, what I would like to see on TWC is relating your Elliott Wave counts to other confluences like monthly, daily, weekly levels or VWAP or other levels as you do sometimes with pivots. Yeah, you know, I mean, I try and show the confluence when I think about it. I'll admit sometimes, well, a lot of times I don't think about it. It's in my head. The confluence is there in my head, but I don't think about actually mentioning it. You know, when you do what I do, you have to constantly be active in trying to remember to do these things. So I'm going to work harder on that. Okay, I'll work harder on that. It is, you know, definitely just unfortunately one of those things with what I do. But I'm going to make it a point to work harder on that to see if I can do that more often on a regular basis there. Okay? All right. Let's see here. State of Crypto agrees 100% that changing your mind is wise, particularly as new information flows in. I'm noticing we share some similar points on mentality. Yeah. You know, because again, guys, at the end of the day, what you think it means to be a trader is really most likely not what it really is. Okay, we come in, and again, you know, I remember this from when I first started 25 years ago. You still remember these things. If you're fortunate enough to remain in over a long period of time, you'll remember these things. You'll remember some big, great trades. You'll remember some big losses. You'll remember your attitude when you first came in because you'll notice how it's changed to what you do now. And that change really has a calming effect on you. It keeps you from FOMOing in so greatly and whatnot. So yeah. Yeah, exactly. If you miss a trade, there's always another trade to be taken. Don't stress out, guys. Just move on to the next one. It's all good, right? Of course, you know, on Wednesdays for Tier 3, we have our tips, tricks, and techniques segment. I should have named it something else. Our Triple T, where we give you, you know, rules-based strategies for entering trends that you might have missed out on that entry at a lower level at. So that's always helpful. But at the end of the day, guys, you know, it's not the end-all be-all if you miss some move. Again, I'm here to tell you right now, you're going to miss a lot more of the big moves than you'll catch. But when you catch them, they make a lot of money, and it's not such a big deal. When you get to that realization that it's not all done and over if you miss that move, or if you don't buy the very lowest price, or if you don't sell the very highest price, when you can get beyond that, your trading becomes much more zen-like. It's a lot easier to sit back and remain calm. You know, people always ask me, you know, how do you always remain so calm when the market's doing this or that? Well, it's because I'm used to it. You know, I've been doing this a long time. And what I've learned over that long time is no single trade, or you're very unlikely to make one single trade that'll just be, the greatest trade of all times. You'll make a lot of great trades, and you'll make even more good trades, and you'll make a lot of bad trades. But that's the reality of it. As long as you recognize that, trading treat trading like a job. Go in there, do it, get done, come back the next day, do it again, right? That's what it's. If you can do that, it'll help you out a lot. Let me see here. Just in time, what's out, man? He says, I almost hate to ask this. Almost, not enough not to ask it, apparently. But I'd like your perspective. Thoughts on the vax mandate's effect on the markets and U.S. economy with so many of the workforce willing to leave their job in such rapid succession? I think it's an interesting convex of things happening. Right now, people are so willing to leave their jobs because the market's up and everybody thinks they can day trade their life to where they don't have to worry about jobs and whatever, but they don't really know what they're doing. They're just, in this euphoric area of a bull market, which, as I've mentioned many times before, guys, in a bull market, everybody's an expert, right? I think, if we get the turnaround in the market, that I've been talking about as a possibility, that things seem to be leading toward, where all of a sudden people don't have that same view of it's so easy to make money, I think it's going to change. I think they're going to suck it up and get the vax. I really think that's what's going to happen. And this isn't the time to argue about whether, we should or shouldn't get the vax or whatever. It's just, as Justin said, the idea of what's going on with the vax, with people's opinions about the vax and about leaving their jobs and everything, and the reality of the fact that we're just in this huge great bull market that we've been in, a secular bull market for the last 10 years. Bitcoin has only been in a bull market for 10 years. We say, oh yeah, it's had these great big pullbacks, but ultimately Bitcoin has continued to rise over 10 years. Huge, year over year effects in general. And so, everybody's kind of riding on that, right? Even gold's been running up. It ran up from about 2015 to about a year ago. Silver itself ran up as well. So there's so many ways that people can make money in the market right now so easily without really knowing what they're doing, that I think that once that is no longer as palpable for the new traders who, the Robinhood traders, basically, Wall Street bets, stuff like that. I think, people, this is what always happens, guys. End of the market, everybody's in, everybody's got a new life, everybody's never going to work for anybody again, and then boom, the market drops on them. And they all go back to their jobs, and they all forget about it. I'm often reminded of the shoeshine boy parable, right? And basically, if you haven't looked it up, guys, definitely Google it, shoeshine boy parable, okay? It was touted as a true story. I think it was probably more of a parable. But the idea is that when you get your average Joe, somebody who doesn't normally do investing or trading as a thing, somebody who's not very knowledgeable in it, they're just all of a sudden in it, and they start giving you trading advice. Think of TikTok investors channel stuff on there. Oh my gosh, it's so bad. Doge is going to $1,000 stuff like that, right? And so the idea is that when you get this type of retail involvement, it's usually a sign that the top is in or very nearby. And so again, historically, every time, the market tops, this is what it gets to. And then it goes the other way, and nobody's an expert anymore, from all these new retail traders, and they all go back to their jobs and they forget about it. And I really think that's kind of where we'd be heading to that. You're referring to non-traders, general population? Oh, yeah, it's going to have a spillover effect on that. Yeah. Because think about it. Everybody's willing to because the economy seems so good, right? Again, that's based on what's going on with the markets. And so if we get this reversal into a recession or potentially even a depression, all of a sudden, all this ability to move out and do all these things are not going to be available anymore. Your options are then limited, and it becomes scary because it's like, well, I think I want to stick with this employer because they're a big employer. They might weather all this much better than that smaller one I'm thinking of going with, or that thing I'm thinking of doing. So yeah, the spillover effect from the market reversing, it would be the same way to non-traders, non-investors, general population. Yeah, they're not going to be so excited about leaving their jobs if they're scared that they won't have a job, right? So yeah. And if they see the government pulling back on the freebies, that'll contribute to it as well. Over the last year, we have this big, I can just leave my job because they've had, the mortgage moratorium, rent moratorium. They've had the student loan moratorium. They've had the expanded jobless benefits payouts and all that. I mean, they've had a lot to gain where it hasn't been so scary not to have a job, or to take a chance and move elsewhere within a job structure, within a type of job that you want to do or something. But when, and that's all gonna, it's all gonna go to the wayside at some point. It really will. And when it does, all of a sudden, they don't have as much support for their reasoning for jumping out of that. Yeah, so I think they'll be much more keen on remaining with their employer, even if they're not a real big fan of the employer or their job at the moment. Because at the end of the day, nobody wants to be jobless without money, right? You can, people want to be jobless and, get money from the government. A lot of people do. It's fine. They want it, to them, it's fine. They want to do that. But man, to be jobless without any money coming in, that's scary, especially if you have, family to take care of. So yeah, it's all about the market. It's all about the market. Everybody can talk big stuff right now, but when push comes to shove, people are going to do what they always do, and they're going to, for the most part, they're going to retreat. They're going to do what they're told they have to do. So yeah. Let me see here. What do I think about Janet Yellen stating that the U.S. is on track to default on national debt in October? We won't default. The U.S. will not default. I'll have to see. I didn't see exactly what she said there, but just based on what you're saying, yeah, no, we're not going to default. The only way the government's going to default on its debt here in the U.S. is if the government goes under. So yeah, I don't see that as really an issue. But now I'm going to look that up now, find out exactly what she said there. Mark says, I read an article in Canada that we are struggling to fill open restaurant jobs because many people are unwilling to work in that market segment anymore due to the uncertainty. Yeah, there's going to be additions on that. You've got, with a lot of these jobs, it'll be potential COVID, related fear there. The stress because, restaurants have taken on a lot more active role. They're doing a lot more of the takeout and everything. And, so that's adding more stress to their employees, a lot more work, because they're getting more orders that way. And so, you've got that. You've got a lot in healthcare are fearful as well. We know that there's the Delta variant is I think I saw something recently said it collects 1,000 times more in the mouth and nose than what the previous COVID did. And now we're hearing about this Mu variant, which is potentially resistant to these current vaccines. And so, a lot of these jobs, are more worrisome about the people in them are more worrisome about, contracting COVID and potentially, ending up hospitalized or dying as a result of it. You can't blame people for that. But at the end of the day, when push comes to shove, people will take what they can get. I mean, that's just, people in general aren't going to sit there without any income if they can help it. And what I mean by that income is, nothing from the government, nothing from work and all that kind of stuff. So yeah. We've got this huge mention of job openings, and we've got a huge working class. But I think the bottleneck in this may be that a lot of employers aren't hiring. So they have the job description out, they get the job opening out there, but they're dragging their heels on actually hiring somebody. I think that's where we're getting a bottleneck at the moment here. And, there are people who, oh, I'm not going to work for that. You're not paying enough or whatever. But, all these things, things that you're able to say at the moment, if the market takes a downturn, you're not going to be able to say anymore. People are going to take what they can get, I think. Yeah. Like I said, again, guys, for many of y'all, this may be the first, especially if you're trading right now, maybe the first real market that you've paid attention to. And then with, which means you're paying a lot more attention to the economic impacts of COVID, potential market downturn and all this stuff. And so, it becomes a lot different now than what you may have done in the past. Or maybe you're really young and this is the first market of this kind that you've ever actually, that's been around since you've been around. Maybe you were really young during, the great financial crisis in 2008, 2009 there. So, yeah. But this right here, really everything that's going on, guys, from the euphoria and the things that we're talking about right now, it's the same way at all the tops of these markets. Every time we get to a market top, it's the same thing. And then again, when the market reverses, everybody goes back to doing what they were doing. And all these things are no longer a thing with that. Let's see here. Ms. Melody. Oh man, you guys are funny. Let's see here. Don't they do that dance every year? National debt? Yeah, probably, or something similar to it. Yeah. It's always about, the thing you guys have to control is the easiest way, or the thing you have to understand is the easiest way to control people is through fear. Okay. As we look in the markets, often the fear of missing out or the fear of price dropping are the biggest catalyst to trader movement or investor movement, right? And it's because in life we're fearful of the unknown, and so the government it uses those things to kind of tell you, hey, yeah, we're going to do this, and or we're going to do that, and it gets you fearful. Because if you're fearful, then you will potentially do what they really want you and need you to do. Now, whether they're right about what they need you to do or not is not the question. They believe that they need you to do a certain thing, and to get you to do it, fear is the easiest way to do, or then the most usually the most promising way to get you to do it. All right, so yeah, but yeah. Hopefully that makes sense, guys. Hopefully that makes sense, okay? Again, we're not talking about whether the vaccination thing is a good thing or a bad thing or how you feel about it personally. I'm really just interested in what it means for the market, as I've mentioned before. And so, these are the things that I believe that it means for the market, because it really doesn't matter what I think personally about it. Either I'm going to get it or I'm not, right? The vaccine. But I'm a trader and I'm an investor, so I'm interested in people, right? I mean, you guys that you've been following me, this is my thing. This is what everything I do is based on, right? Cycles, social mood, these kind of ideas, right? And so to me, it may be something a little bit different than what's happened, in recent downturns or recent market tops or whatever, but nonetheless the market top is generally the same. Your actors act the same way. Everybody feels the same way. Like I said, when you get to more macro tops, everybody is going to feel bullish, right? So Wall Street, Main Street, everybody thinks it's going to continue up there, and usually that's about the time it turns around. It's when it gets the buy-in from everybody. Again, we saw that pretty much in 2008, right? Into 2007, coming in 2008. There's a great, if you're into movies, you can watch The Big Short, and there's a great discussion about it in there, about how nobody sees this is coming. Everybody thinks it's going to continue up. And that's generally what we get. So, really you got, and so, again, with the vax mandates and stuff like that, people argue against it all they want, But when push comes to shove and they got to put food on the table, they got to pay their rent, they got to keep their kids clothed and fed, you know, for good, bad, or otherwise, they're going to do what they need to do. And honestly, that's being a great parent. You know, you do what you need to do to make sure that your family's taken care of. Whether you want to do it necessarily or not, family first, right? You guys know I'm a big proponent of family. So yeah. Futures ETF may be a possibility in November, Andrew. You know, I'll be honest with you. I've given up on the whole ETF thing. It's going to pass at some point, most likely. As long as Bitcoin continues to be a thing, I believe an ETF is going to pass at some point. I'm not really trying to make bets on when it's going to happen and, you know, anymore, all that. The SEC is trying to take a hard line right now toward crypto, in case you guys haven't been paying attention. And so, you know, I think they'll probably continue to be hard-nosed, hard-lined against it until their arm is actually twisted by something. So, yeah. But I don't, you know, I think you break 52. I think you're good to go higher. Yeah. You break 42, you're heading down maybe about 38, 38 and a half, 39 kind of area. Yeah. One question regarding the Bitcoin chart. Let's go back there real quick. Let me see here. Let me see here. Oh my gosh, where did we go here? Okay, there we go. I'm sorry. State of Crypto says, one question regarding the Bitcoin chart. If you ignore the large wick from September 7th and rule it out as an outlier, chances that Bitcoin is forming a double bottom? I wouldn't ignore it. And I know that's probably frustrating for your question, but, you know, I've been doing this a long time, and there are two camps when it comes to technical analysis. There are those of us who believe that wicks are significant sources of information, of significant information. And there are others who believe, well, you can just go on up here and, I guess not in there. You can just go in here and take the wicks off and just play it by the candle spreads. I think just playing it by the candle spreads means you're going to miss a whole lot of information. I'm a firm believer that much of your most important information is in the wicks, guys. It's in the wicks. And so, you know, I can't ignore it and say double bottom here because it's not really a double bottom. You know, you do have this push that hit this liquidity down here, which shoved it back up. I mean, this is significant. This move right here is significant. And so, yeah, I see what you're saying, but I can't ignore the wick. To me, I think you end up really standing the chance that you're going to make a bad decision if you do. Yeah. Hope that makes sense. Yeah. Let me see here. Well, with all that said, Kevin K says, holders will win in the end. Am I right? I think there's a good chance for it. Again, guys, I can't guarantee it's not. I've got my money where my mouth is, but my money went in significantly at the beginning of 2017, right? It's right there around the $1,100 mark, $1,100-$1,200 mark for Bitcoin. So I can say this, like, oh yeah, sure, I'm well up, right? 40, 45 times up, right? Not that I haven't added along the way, as far as the investment side goes, but I do believe that holders will win overall. But again, guys, we don't trade on just, I want to believe that kind of thing, right? We have to be aware of what's going on with the markets and everything. Because again, guys, the one thing that really keeps me questioning is what happens to Bitcoin if we have this, this expected potential depression-esque type thing. What happens to Bitcoin? Maybe it'll survive. I mean, I don't see a reason why it has to necessarily end, except that it is a purely speculative thing right now. Yes, it can be used for money, but like here in the U.S., for instance, we accept it for subscriptions. right? But we don't get taxed on it as regular income. We get taxed on it as short-term capital gains, right? So our tax side of it is much larger than it would be if we just accepted cash. And that's a huge thing, guys. You know, whether you want it to continue on, you know, just because you want it to continue on, doesn't mean it makes a lot of sense. I think Bitcoin's got a lot greater future if we can get out of that dang long-term nonsense. If we're going to accept it as payments and you treat it as regular income. But until then, I think, you know, that's still a big potential risk in it. And of course, that's just the U.S. You go, oh, well, the U.S. doesn't, you know, control the world. No, but the U.S. is a significant part of Bitcoin. U.S., you know, traders and investors. And if they were out, or a significant portion of them were out, Bitcoin will fill it, guys. Don't kid yourself. You know, there's so much hatred toward the U.S., and I can see why, for sure. But let's be realistic about this here. Let me kind of catch up with where we were at here with this. But you know, we have to be realistic about things, guys. We have to be realistic about what's going on, when, where, and why. You know, what kind of effect does it have? I'm not here to blow smoke up your rear ends to make you feel good, you know, because I agree with you kind of thing. I'm much more interested in you being realistic and open to what may realistically happen. Because if you're anything else, guys, you could potentially lose your money. Now, again, nothing has happened yet that says there's no reason why holders won't win overall. You know, that they won't continue higher and higher and higher. But there are significant risks that you need to be aware of, because Bitcoin is such a volatile, risky asset. And you say, oh, but Chris, look. You know, all these huge investors are in it, and all these big companies are allowing people to trade in it now, you know, and Fidelity saying, oh, it's going to be $1 billion a coin, or whatever they said. Remember what I said earlier about at the tops of macro markets, at the macro tops of markets, we often have an agreement where everybody believes everything is going to do great, right? Don't forget that. Just because they're allowing this, just because they may be involved in it, doesn't mean it has to necessarily go up, guys. Because when the proverbial crap hits the fan, risky assets are the first thing that are ejected. They're the first thing that people get rid of. And the larger and more significant you are, you know, the more the larger capital base you have, the quicker you are to get rid of that those risky assets. Most often, you know, this is a general thing. You're going to have your outliers that can continue to hold or whatever. But don't think just because a few big, and really it's only a few big names, guys. I know it seems like everybody, but it's not. Very few of the really big players are in it, okay, in the grand scheme of things. But just because they are in it does not mean it has to go up and do all these things that everybody's hoping it does. Now, I still think it's got a great chance to do those great things, and that's why I continue to invest in it. But make no mistake about it, guys. I would never say, oh, yeah, it's good if it's going to go up and there's no way it can't. That's just silliness. I've been doing this way too long to take such a position. Usually those positions are taken by two types of people. Those that are new to trading and really need it to happen, and those who are involved in it in a business way in which that increase helps them with their company, with what they're doing with their company. Those are the two people that will generally be on that high end of it. But the rest of us who are really traders, who are really investors and whatnot, you know, for the most part, we're going to look at that and go, well, I'm going to be cautious still. I'm not going to just be like, oh, yeah, and ignore anything that ever happens, and it's definitely going up forever, and not worry about it. Even if we had a huge drop with Bitcoin that took it, I don't know, below 1,000 or 500, it doesn't have to die out then. That just becomes an enormous wave too, right? And so then the potential upside to that is, potentially quite huge. Here's the thing. If something like that were to happen, most of y'all would be out. I'm not trying to do this to be rude or whatever, guys, but I'm being honest with you. Most of y'all would be out, and you would not be interested in it. Now, some of y'all may come back at a later date after it's made some significant movement up from that $500 level or something. But the reality, the way that human beings are, most of y'all would be out, and you wouldn't think about it as a reason to enter anymore. Because you believe that it's going to do this right now, and then it would fail to do that, which has a negative effect on your emotions, right? You're in that position where you need it to go up because you're already spent. And what I mean by that need it, guess what, guys? I don't mean that you need it because, that can pay your bills or whatever. I mean, need it because in your mind, you've already spent all that money that you think you're going to make. You're already buying the fancy cars, the nice house, paying off the debt, buying your wife those fancy presents, your kids all those toys, buying yourself all those toys, whatever. It's already happened in your head. You've got an emotional commitment at that point to price going up, to reaching those levels. And so if it does something different, it will be traumatic. And that trauma will often keep you from getting back involved in it. And like I said, if you do, it'll only be after it's risen, well above where you should have bought back in at the bottom of the market. This happens at every market downturn, guys. Barely anybody buys at the bottom. All you have to do is think about Bitcoin at 3,100. Who was buying there? Most of y'all weren't. We did. Some of our members did. But, most people don't because it's a scary thing. Big drop, you're down there low. Everybody's talking about it's going to go lower. Everybody's bearish now. It's hard to make that commitment, right? So don't take anything I've said here, hopefully, as personal or anything. But it is an understanding of humans and how we act and react to the things that go on in our heads. How we position ourselves, how we set ourselves up for failure, which then becomes self-fulfilling. And we don't get beyond that. We can't understand how we can control our lives because we've unintentionally been setting ourselves up for failure already. Okay, guys? Yeah, so on the 1 hour, I see a D. Yeah, right now we're looking at possibly, if price continues to rally up here, possibly a wave D. Go ahead and zoom back in, rewind to the beginning of the show, and that way I don't have to go over all of it again. But there are a couple of other things I'm looking at on that if it breaks out above wave B here, if it breaks out above 51,467. If it doesn't break out there and instead breaks down here, I've got a couple of different scenarios, few different scenarios that I'm watching, depending on how this price action locally plays out. Yeah. So yeah. This triangle would only be wave B. If the triangle plays out, it's only wave B of wave B. So you make the move up to wave C and then back down, to finish out wave B and then down to the larger wave C. That's right. Fortunes are made at the bottom, not the top. Well, some fortunes are made at the top and then lost when price unfortunately turns down on them. No worries, Andrew. No worries, man. I was just letting you know, yeah, there are multiple different ways that we can view this range. And I kind of went over them there at the beginning. So that'll be the easiest way to do it because it took a little time to go over it. Chris, what's the strategy you're using for determining when to exit out of your longer term holds? If you've been in Bitcoin when it was sub 2,000 and it went up to 60 recently, was there a reason why you didn't exit at that point? Yeah, because I'm looking for my macro outlook on what's going on here after we kind of went by that whole idea that maybe we weren't doing the ABC, that maybe we were going up for this this extended bull run end coming up. And so when we went through that and we continued up with that, that kind of, that has me on that position that we are going higher there. And that would be one reason why I wouldn't exit just yet. But we're talking about investments. Investments meant to be held over time. I have to look at my average entry timing because, again, here in the U.S., we get taxed on whether we hold over a year or not. So I have to make different assumptions or different plans based on average time of entry where we're at, potentially where we are at in terms of the market itself and all that kind of stuff. That's what I keep telling you guys. Don't necessarily follow somebody just to follow them with their entries and exits, because it may not be the best thing for you. Again, my particular situation is going to be a lot different than all of yours. So my potential longer term entries and exits very well might not be the best entries and exits for you, which is why I try to look at the chart more objectively and give you possibilities and give you information that you can decide how you want to trade that. So yeah. Hobby, what's up, man? This is what a stream of knowledge. Oh man, I appreciate it. Thank you. This must be the best vision casting I've heard in the 1 to 1.5 years I've been around. Can't tell you how much I appreciate it. Ari, hey, yeah, Ari, oh man, hey, yeah, I appreciate you, man. I appreciate you. Again, guys, you're either going to join us or you're not. My life isn't determined by that. Now, again, as an entrepreneur, I would love for you to join, and that would allow us to continue building and producing better and better content out there. I continue to tell you guys, I am not altruistic at all. I don't believe in altruism. I do it because, one, as an entrepreneur, I'm driven to build. But two, as a person, it makes me feel good when you get it. When and sometimes it's quick, sometimes it takes longer. But when you finally get a hold of me, you go, man, Chris, listen, dude, I get it now. It makes so much sense all of a sudden. And it's helped me with my trading. And I've been able to do this and that. I've been able to provide better, whatever. Guys, you know what? That makes me feel freaking amazing. That's why I do it. Yeah, there's a little bit of income to it. Yeah. But, it doesn't compare to what I'm trading. So, again, if it weren't not to work out, I would be just fine. Other than, wanting to still build something. But I think that's where people that are following along with me, if they've got an open mind and they're willing to listen and get out and be more humble and understand that maybe they don't know what they think they know about trading, this is where they can really kind of excel, because they don't have to worry that I'm selling them something just to sell them, which is what most do out there. Raging Bull, big example, right? Raging Bull lying in its ads. I think it was called Raging Bull, wasn't it? Lying in its ads and everything, got pulled up by the SEC. They were making stupid money. They were making tens of millions of dollars a year. But they felt the need to lie and to do all that. It wasn't really about, it was just about creating something that they could put out an image and then people would buy it and they'd become rich. Man. At some point, money becomes a counter more than anything else. It really does. And maybe that's a hard thing for people who are not as well off to get at first. But if you're fortunate to get to that point where you have enough money to pay your bills and to live comfortably and not worry about the stress of how I'm going to pay this bill this month, or I'd like to do this something special, money becomes a counter. And at that time, the making the money is not because, now I've got so much more money. It's because, I can increase what I'm doing. I can do it better. So yeah, hopefully you get that. I think a lot of people that tune in do. Not everybody though. Not everybody. And I don't hold any animosity toward them. Now, if you come at me as an idiot, as a jerk, as just rude and disrespectful and unkind, yeah, I'll give you some words back. But but I get it. People aren't going to get it. They're not. Most aren't. For the few of you that do, there's a lot of possibility in that. So yeah. Bill, you're welcome. Yes. Yeah, the exit strategy. Yeah, I would say probably the exit strategy, guys, when you're trading is probably more relevant than your entry. Yeah, I would say that your exit strategy is probably the most important. Especially if you're not using good risk management on that. Hey there, Merv. Good to see you checking in. Excuse me. Yeah, Hank, exactly. Let me see here. Let me kind of catch up with you guys here. Let's see here. Silvio, hey, Chris Baker, good to see you checking in, man. Silvio, always good to see you. This is thinking now about trading and then, thinking you do know about trading and then it throws you back, and then knowing you don't know anything and it throws you back on your feed. Yeah. You know, it's all about, you know, again, guys, I always make these analogs between trading and life, because I'm just such a firm believer that how you look at life will affect how you look at the charts. You can't possibly be successful over the long term as a trader if you don't believe that you have any control over your life. In order to trade successfully, you have to believe that when you enter a trade that you've got a chance that it's going to work out. Not a hope, you have to actually believe that. You've got to believe it. And you believe it by learning about risk management, by learning how to do it properly, by developing your skill, just like any other skill out there. And the greater, the more time you spend developing, the greater you get at it, the greater you become, and the more confidence it instills. Yeah. All right, so jumping on over here to the DXY, the dollar is broken out of the local downtrend here. I'm off right here. I don't know if this is an anomaly right here or not. I'm really kind of leaning to the possibility it might be. And if this is an anomaly right here for this wave 2, then wave 2 is actually right here. And if wave 2 is right here, then what we likely have is a 1, 2, 3, 4, 5, which gives us a 1, 2. But for now, wave 4 is pulled back kind of deep, but it stayed above wave 1, so it's still valid. So we're still looking at a potential wave 5 up here around the EQ of this supply structure up here, about 93.10. You can see that it finds confluence with the pattern target up here at 93.117, and just a bit higher there, the R2 1-hour pivot at 93.125. So a good potential target area. Now, what's going to tell me is if we're rallying above and beyond that, then I'll relook at this as maybe, again, this being just a technical glitch, anomaly, whatever, and so that this becomes wave 2 here. And if that's the case, then we would see how you get this here? Look at it, almost perfectly to the 2.0, right? And so in that case, we would expect to see price continue to rally through that wave 5 target toward, well, right now it's the R4 pivot on the 1 hour. Now, obviously, at the end of the trading day today, pivots will be gone. New ones when it opens next week for the hourly here. But, we get up there about that 93.81 area for wave 3. It'd be a 1, 2, 3, pull back for a 4, and then a 5 potentially up here at about 94.159. So I'm still open to the possibility that could have been a anomaly there, a glitch, something like that. And actually wave 2 is right here, which again gives us a potential 1, 2, and up. So we'll see that. Again, we do have the breakout of this descending channel resistance. I want to see a breakout, an impulsive breakout here above 92.761. That'll add confidence to the idea that 4 or 2 is done here, and we've resumed that rally. Prior to that, be careful of a possible drop down below the swing low here. And in that case, again, maybe it's a 1 and then an A, a B, and a C, maybe like a flat correction or something, and then it heads up. So we'll see what it goes on. But overall, potentially dollar finding a bottom and heading up. So we'll see how it plays out. Still haven't got above that 94.742 I need to see. So, there's still the possibility we could drop down to the, to a new low below that macro low so far in January of this year. So, yeah, we'll see what happens with it. Hank says it is an anomaly, not on any other DXY chart. See, that's what I was thinking. So again, count at least a 3-4, but potentially a 1-2 with a higher upside on it there. Thanks for letting me know, Hank. I thought that might be the case. I actually was watching it. I actually caught it out of the corner of my eye when it happened. And I was like, and it was just a quick down and right back up. And I said, that doesn't seem right. So yeah. Kevin says, is this just the type of market where you cut losses, take profits, and sit on the sidelines until things become clearer, easy to trade when the bottom looks like it's in or everything is booming? When you say this market, are you talking about Bitcoin? And again, when you say this market, Are you talking about the sideways it's doing the last few days? Or you'll have to help me understand a little bit more about what you're talking about there. I think, you know, you're taking a lot more risk if you're entering Bitcoin right now. I think if you're going to enter Bitcoin right now, there's potentially a good ratio here, you know, a good risk-reward ratio. If you enter long here, I think you definitely have to put your stop loss right below the swing low. Because if it breaks down below it, then that means this is not going to be a triangle here. You know, because what's most likely to happen is it'll drop down below wave A. And you need to be out to figure out what it may be doing. So, I mean, you know, you're pretty close. God, I don't know. Maybe you're, guys, I don't know. I guess you're actually up $800 now, right? But still pretty good, close there. You're up about $824, you know, $825, $830, $50, whatever would have to be your target there for a stop loss. Just somewhere below, pretty close to this swing low here. Because the minute it drops, I mean, you could do it 1 penny. The minute it drops down below this swing low, it invalidates what we're looking at the moment. If you were looking to enter this, but you weren't very confident that maybe the triangle's playing out, you could always buy here with that stop loss there. Wait for it to push up, wait for it to confirm this wave D and start pulling back. And then when you get that wave E, which is likely to be somewhere around this kind of 45.5, 45.6 area maybe, you know, where you've got all this support here and resistance at the moment. And then when you pull back for the wave E and you get some confirmation off that, you could add to your position. And then you could add to your position again when you break out above wave B and again wave A. So in that way, you're building a position using intelligent markers along the way. But I don't think this is a good place just to go long everything and just ignore what's going on there. Yeah. Let me see here. Okay, so yeah, so you know that's kind of what we're looking at with the DXY and Bitcoin there. Let me see here. Oh, that's still the DXY chart there. Let me get you another chart here, guys. NASDAQ. Let's look to see what the NASDAQ's doing here. Again, remember, guys, this is the NASDAQ composite. Just to make sure that you understand, it's not the NASDAQ 100. Those are two different indexes. Man, oh man. So I looked at the possibility that maybe we had a 1-2 here, but noting that it looks like it's 5 down. We did stop. I did note in the update this morning that we stopped just a few points below that swing high up there. So if we got a breakout, we were looking for a wave 3 up here at 15,479, but we didn't. We got to drop back down. The question is, did we drop below the swing low? And so we got a low here at 15,207.30. Nope. We are just above this. So now the possibility is that we've got an ABC here. And so I'm looking at this as maybe a leading diagonal, right? So 1, 2, 3, 4, 5 gives you A, B, C, and then A, B, C down here. And then we get an ABC up. Now with this drop here, it almost went down. If we were to continue to rally off here through the end of the day or into next week, that gives us a wave 3 possible target there of 15,444.75. All right. And so we would look for that to form in an ABC. We would need a breakout above wave B here at 15,349.47 for added confidence to that, but that's pretty much almost that top there, right? So we go A, we go B, and we go C here now. If price drops below this swing low over here, this 15,206.61, then that's going to start looking like maybe we've got a top in here. It doesn't guarantee it, but it starts looking like maybe we do at that point. And so we'll want to continue to watch that. Let me see here, 15,500 basically for wave 5 here if we're continuing to work this up as a as a diagonal. Here's as an ending diagonal. Again, in order to be any diagonal, these rallies have to be in only 3 waves. They have to be corrective, ABCs. So we would need an ABC up for 3, ABC back for 4, ABC up for 5. That's what we'd be looking for. And 4 should overlap with 1. But like I said, if we break down through this level, then what I'm interested in is, first of all, wave 1 here. What I believe is wave 1 here at 15,144.48. And really looking for a breakdown below what we have here is a wave 4, this significant swing low at 14,939.56. If we get down below here, then it makes a really good argument for this to be the top here. And in such a case, you know, maybe this is a 1, 2, 3, 4, 5 to finish that off there. So 3 here would be back over here, right? So this move this 1 up here. So it goes 1, 2, 3, 4, and then 5 over here maybe. But again, remember, this rally that we've had, especially since March of last year, has been driven by tech. And I keep reminding you guys, if the NASDAQ turns down, you should really be paying attention because there's a good possibility that's marking the top of the markets, right? Because it's been the leader. And it's only been a few tech stocks, not the whole gamut of them, that have really been pulling it up. So shorter breadth of stocks and really geared toward that one segment. So you're going to need to watch that, okay? Hey, man, LXT, good to see you, buddy. I hope you stop in more often. Lamb, what's up, man? You missed everything, buddy, always. Oh, Kevin, you're talking about crypto going sideways, so I think you're talking about the last few days. Yeah, you know, I would, you know, again, other than what I talked about, that potential entry there, if you're looking larger term, I think I would wait for a more significant confirmation that I spoke about earlier to come in before really entering. But if you're looking for shorter term trade, again, I think you just put that stop loss right below that recent swing low, about $800 lower there. And if you drop through there, don't hold. The minute it gets, the minute 1 penny below that, get out. Be out. Because at that point, it invalidates what we're looking at, the triangle there. And like I said, if we're dropping below wave A, that makes a good potential argument for maybe it was an A down as the drop, a B was up, and then we're making C down toward that 50% retracement level. So yeah. Let me see here. So this is, you know, again, tech-heavy NASDAQ. Kind of tech-heavy S&P here. These are the E-minis. See here. And so it's still going to be driven by tech, but it also has, you know, a wider base of stocks in it. Right now we're looking at a potential top in and a 1-2, 1-2. If this count is correct, then we're looking for wave circle 3 here, a minimum target of 44.29. So does this tell us maybe that the top is in and we're getting a divergence in indexes? Remember, I keep telling you guys, when you get to a more macro top, you're going to usually see a divergence in your indexes. And that's really a product of how they're made up. If the end of that bull is driven by a segment, and that segment dominates an index, you know, there's a good reason that you might see that index be, you know, kind of lead or play out better than the other ones. You know, there'll be that divergence in it. If we jump over here to the Dow Jones, remember Dow Jones, much more broad-based, much less tech-heavy, and remember it's only 30 stocks, right? But if you guys will remember, I also talked about the Dow Jones transports and how the Dow Jones Industrial Average actually was born out of that, right? And so we often look at that Dow Jones transports for any kind of divergence that it might have that could lead us to let us know that the index is probably dropping down. And so as we can see here on the weekly here, you can see that the Dow Jones transports have been going down since the week of May 10th, the last few months, right? Whereas the Dow Jones has hit its all-time high here so far in August, a few months later. So again, the Dow Jones transports here may be telling us that the market's turned. In this case, I've got a 3, and I've still got this as some just god-awful, maybe ABC here, just trying to give it some sort of benefit of the doubt. But as I mentioned, if this price drops down below Wave C over here at 34,690.25, that invalidates this possible bullish move up. Now, it's possible that we could have this A, B, or I'm sorry, 1, 2, 3, 4, 5 kind of thing, finishing off Wave C. But we're going to want to see a breakout here above 35, 199 and 89 cents there as the first clue that it probably is. We need further breakout above Wave E of B here at 35, 422.71 to add confidence to the count. And in which case, this is going to drop lower here now. Remember, this is an ending diagonal. Yeah, I would look for just to get above probably, you know, this R3 pivot area maybe. You know, this 35,700, 35,800 kind of area maybe as a target for that. And there's always the possibility that the count's correct and this is just a truncated fifth. But again, I'm not a huge fan of truncations. Truncated waves, almost all the time, you can find a better count that actually fits without a truncation. So in either case, it would denote dropping below this wave 4 here should denote a probable top here. That being said, you know, until we drop below the wave 2 down here, it is possible maybe A, B, and we're working on a C for wave 4 still to go, and then we'll get ABC up for wave 5. So like I said, dropping down below here invalidates what we're looking at here, but it could just be that this is an A. Oh, sorry about that. That this is an A, this is a B, and we're working on C down here, deeper into wave 2. But if price drops down below the wave 2, swing low over here at around 33,750, 33,740, right around that area, then that will definitely, per this count, it will indicate that the top's in. And like I said, in that case, truncated fifth, maybe we've got a different 1, 2, 3, 4, 5 here, maybe something like that. But as long as we rally from here and we get above that, and then that kind of gets us still moving up here toward the potential 35.7, 35.8 kind of area. Let me see here. Oh, Kevin, you're definitely welcome, man. Let me see here. So that's what we got there. Oil, man. Oil's been kind of crazy. You guys trade oil? You know, I'm always interested in oil because, you know, if I'm trading it, there's that. But also, you know, I like to trade that USD CAD. And by the way, up 62 pips now, right now, from this morning's entry, up about $800. But, you know, because the loonie, the USD, the Canadian dollar there, is a, what do we call it? Oh my gosh. Just completely lost my thought there. Sorry, guys. Commodity. It's a commodity currency. And what that means is Canada gets a lot of its revenue from oil, from the sale of oil. So if oil prices are slumping, that's usually going to negatively affect the value of the Canadian dollar. And you're going to see these same general things with things like the Aussie, which has minerals like gold and stuff, because it is a commodity currency in that respect as well. And, you know, so you'll see it on other currencies as well. But so for me, when I trade that USD CAD pair, I'm interested in what is the dollar doing and what is the oil doing. If we can have oil going up and dollar going down, man, there is almost no reason, just that alone, that you shouldn't be long the dollar against the loonie. But if there are divergences, if one's up and one's down, well, then you have to look at, okay, what is the impact? Is it short term, longer term? What's going on here to get a better idea of what may be going on in that chart. But yeah, so yeah, but so the oil here, again, look at this, guys. We had this huge drop down yesterday, followed by a huge move up, almost taking it out, followed by a large drop down, taking it out, followed by another large move up. This is all in the past basically 24 hours or so. So a lot of large movement here locally with oil. Right now, I think maybe we have a 1 down, and then we've got an A, B, C as a flat here for wave 2. But I want to see some impulsive breakdown here. Right now, we've got the, you can see right now that we're sitting right above the higher volume node here. So I need to see some move through that and through this node here. So, you know, with the current chart, the pivot right here on the 1 and 4 hours, right around $69. I want to see a nice impulsive breakdown below that as the first clue that maybe that top is in. And then we need to see continued breakdown below wave B over here at 67.56. If we can get that, that adds a lot of confidence to the count. And we're looking for wave 3 down here around $65. If, however, price ends up breaking out above what I have as a wave circle 4 here at $70.61, I think we zoom back out here. I've got this as a leading diagonal, but it may be that we have, instead of a 1, 2, 3, 4 here, it may be a 1, 2, 3, 4, 5, which means wave 1 is done, wave 2 is in progress. And in that case, if we're heading back up here, I would look for that $73.28 area maybe, or maybe even this swing high up here at around $74.28 as the target area potentially on that move up. This would be, you know, an A, B, and get a C up here. So wave 1 or A, wave 2 or B, and then wave 3 or C taking it back down. But there's a lot of sideways here. You know, we had it right here. We've got it right here. You'll notice that this sideways range, let me see if I can do this for you. This sideways range right here sits just below this sideways range right here. So this is sitting on top of it, acting as resistance, as you can see here. And so, you know, if it can continue to be resistance, you know, the count will end up confirming itself and, you know, and head back down. So, yeah. Let me see here. Hey, Diego, have a great weekend, my friend. Let me kind of try and catch up with you guys here. Jake can play. What's up? He says, nice bull dips, some nice bull dips. This morning on the USD CAD. Managed to catch the bottom this morning. Then was happy to see my tweet. Yeah, so jump on over here. USD CAD here. Kind of zoom out a bit. It's the 1 minute chart for those of you interested. So with, you know, we do the daily updates with USD CAD. Actually, we update them twice a day. I mentioned that we had an initial target. I think I mentioned it was this EQ area. And then I said we had a secondary target of the of this EQ area of my 1 hour demand structure here. And so I had somebody ask, why did I enter? I entered because, you know, first of all, that was my secondary target. Second of all, bull divs, guys, like Jake and Play just said there. So we've got it right here on the 1 hour. You see that bull div right there? And let me get this done. Make sure it's not showing up all my other charts. Or all my other time frames anyway. So the bull div there ended up giving added confidence to the idea that the bottom was right there in the area I was looking for it to be. On the 15 minute, same, you know, that bull div right there. Again, found that low right there. So here's the thing, guys. I entered, again, I posted it there on Twitter. I screenshotted it. I entered at 1.25905. The low was actually 1.25826. So I was about 7.5 pips, 8 pips or so off the low. So I've gotten almost this entire move up here. I told you guys, you know, don't worry about being knife catchers. Sometimes you're going to get pretty close to the low. I did right here. This doesn't always happen. But this was a great entry right here. It's been a great move up. Like I said, up to 64 pips now, so $850 on that small trade. Not too bad a way to kind of do a day where I'm busy working and doing everything. And, you know, still able to make a little bit of trading money on there as well. So I'm looking at this. Let me see here. I've got a target. Let me kind of zoom out a bit more so you guys can see this actual bigger chart here. I've got a lot of stuff going on here for that smaller time frame, but basically, what I'm looking at, if you guys have been following me, you know I made tons of money trading this up off this bottom here, right? I've been posting on Twitter for the last few months about it. Had this great rounding bottom here, guys. Look at this. Look at how great this is. Accumulation going on there. You've got all this here. You've got a spring right here. You've got decrease in volume. And then as you get the breakout, you see that increase in volume going up there. I mean, it's absolute beautiful Wyckoff down here at the bottom. And that led to this big move up. So I've got it as a leading diagonal. 1, 2, 3, 4, 5. I've got the pullback here as an ABC. And then off that ABC, I've got this as a 1, 2, 3, 4, 5 ABC. So I've got this as a 1, 2. And so with this being as a 1, 2 here, what I'm looking for in terms of that target is going to be right up here around 1.30205. So, you know, if the trade works out from where I'm sitting in here right now, that's going to be about 366, almost 367 pips. And then wave 5 would be up here around minimum wave 5 at 1.31241. Usually these are extended. They overextend like wave 3 does. So we'll probably go higher than that. But target up there, 1.31241 or so. And that gives you about 470 pips on that. But again, you know, your stop loss would definitely have to be the swing low here. So, you know, if it's a big position, you know, that's a big movement back down. Maybe you enter a partial open here, looking for 5 waves to complete up. Look for that pullback on that wave 2. Watch for the rally off that wave 2 to confirm that that wave 2 is complete. And then you add in a larger bit to your position there to continue adding to it as it rises there. So, yeah. So, let me see here. So that's what I'm looking at there. Isn't that backwards? Oil up, dollar down. You should short the USD CAD. Yeah, again, tell you, Ryder, if the oil's up and dollar's down, yes, but oil isn't up. Look, we're zooming out a little bit more here. We're looking at general trends, guys, not the minute to minute, okay? Though you can get knee-jerk reactions. Oil is down. You see this right here? Oil is down. Locally, it's up right here. Really, it's just sideways. And really, it's down, right? This is down. Or it's up from over here. The dollar itself, if we look at the dollar, we zoom out a bit. Overly, let's see here. What was the time frame I was looking at that at? The 1 hour coming back here from July, the beginning of July. So, from the beginning of July, that's over here. So ultimately, the dollar is up over that time, whereas oil is down. Much more locally. See here, much more locally. Again, you know, it was down here recently. It's now breaking out and up. So yeah, that's what I'm looking at here. No, by the logic, it's not down. Again, July, the beginning of July, same time period. Beginning of July. Oh, maybe it is. Maybe it is a little bit. Wait, where are we at? Actually, we're just sideways, more or less. We're sideways here, more or less. So, yeah, I mean, it dipped down a little bit, but now it's back up there. It was July 5th, I think, is actually where that was. So, we're actually a bit up off that. Really just kind of sideways. So, dollar sideways, oil down. Again, if oil's being sold off, if oil is dropping in price, then generally it takes a toll on the loonie. But we're not talking about that, you know, minute-to-minute move usually, right? So yeah. When you're looking at commodities, yes, you can have commodity currencies. Yes, you can have knee-jerk reactions, but again, what you're most interested in is that larger term. What's the larger trend. And this is something, again, this is something with a lot of, more amateur traders. It's something that takes a while to really kind of wrap your mind around. As far as what kind of determines that trend that you're looking at. But when you're looking at the bigger picture, you should always be looking at the bigger picture and have that understanding of what's going on potentially there, a few months out, maybe something like that. And then kind of zoom in on that. Yeah. But anyway, so that's what we're looking at there. Oh man, time's almost up here. Let me jump over here, guys. Get you a few other things here. Let's look at silver real quick. Leave here. Let's see here. The triangle did not play out, and so as I told Discord, if the triangle doesn't break out and we break down below wave 1 here, then we might be looking at wave 4 being complete here at wave A. The other possibility is that maybe we've got a flat here. And so that would be ABC up for A, ABC down for B, and then 5 back up toward this level again for wave C. So unless we get some kind of extended move down, I think we might see this play out as a possible flat correction right here for wave 4, which means, when price reverses here, it's the ABC down here, we should look for it to target back up here around that 50% area. So I think that may be what we have, A, and then B, and then C back up there. But nonetheless, still look for it to be further down. So this gives us a 1 and a 2. I think I said wave 4, but what I meant was wave 2. And then we'll look for further downside, getting you down here potentially around 22.75 or so for the wave 3 there. Looking at the larger picture here, this is the structure, guys. I've shown you this a few times, from August of last year until now. And, I've told you that my concern here is that we don't just have a decrease in volume. We've got spikes. So we've got this huge supply spike that came in up here at the top, right around the 1st of February. That clues you in that there's a ton of supply sitting up above here. And look what happens. Then we get a lower high off this. Along the way, notice we've got multiple spikes coming out here at the bottom and tops of price action here. And then the top, and then the bottom right there, and again right there at the top. And we come out over here as it drops down, but then it continues to break down. Again, more volume here. A little bit lesser though on that low. So a little bit less interest in selling down here. So this constant rate of these spikes here have me leaning toward the idea that this is distribution potentially here. Okay. Remember, we don't really know until until we get done or near the end of it. If we look at this, we've got this moving down here. So buying climax. If this is distribution here, automatic reaction here, and then we get this move up to this up thrust, and it comes back down here. And now we want to see, do we drop down below that swing low or not? And what happens with that? Because, realistically, if we're looking at this as phase A here, we've got phase B right there. This could be phase C if this is reaccumulation, and it would head up and out into phase D, which is your interior markup, phase E, which is your exterior markup. But I am cautious about that, and I'm remaining with the count I have at the moment, with the idea of where the invalidations are. And so, again, looking at this right here, I'm looking at all these spikes along the way. And, as I've shown you guys, most often when you're in a accumulation range, you usually have a decrease in volume. Overall volume drops off pretty significantly through it, and then it picks up as you get toward the bottom and you start rallying. This right here is just huge for me. This is my big right there. I mean, I could see a lot better potential, reaccumulation here if we didn't have this huge bit of volume. But even with that, we still got all these spikes, and that makes me uncomfortable about definitely calling that it needs to go up higher there. So that's what I continue to watch in this area here. Again, it's possible that this becomes your up thrust. This becomes an LPS, last point of supply. And then we'll come down here, and then we'll get a breakdown here, and then what we would see is something along the lines of a breakdown below the ice, move back up, and it'll get rejected somewhere in here, and then it'll go into markdown like that, if this is distribution here. So we could see that again as your, your up thrust there, and the last point of supply, breaks down here, comes up, rejected, and then gets into markdown. If it's going to be that. It's still, I don't want to call it at the moment. I'm still watching it play out, but those are my concerns with this. Is the continued volume spikes. We'll see if the volume continues to die off as it drops down. One thing you should expect to see is that volume generally picks up as you continue down, and so we want to see if we get some rise in volume as it's continuing to come down, as it gets near here and continues down, and then bounces up and potentially gets rejected there, because that'll tell us that you've got supply coming in more and more as price goes lower and lower, which should continue to drive it further down. Okay? So, yeah. Let me see here. Yes, oil and DXY should be inverted. Yes, I've talked about that multiple times before. Yeah. Because, again, petrodollar, right? USD oil is priced in dollars. Exactly. Have a great weekend, Bill. All right, man. I'll check out the Discord, the PM there on that. Let me see here. Anyway, yeah, so that's that. Gosh, it is getting at 1 o'clock here, guys, so I need to get out of here. As always, I really appreciate you guys checking in. Join me over there on Twitter, TX West Capital. Take those few steps, man. Make yourself eligible for those giveaways we're going to have, guys. Even if you're not a gamer and you happen to win one, you could sell it. Seriously, I'm definitely a capitalist in that way. I don't care what you do with it. You could win it and break it for all I care. That might make my heart ache a little bit. I went through a lot of work to get those things, but it is what it is. It'd be yours, right? But definitely, guys, sign up for the market breakdown, my new newsletter that'll come out on Mondays. Macro looks at the markets, how they interplay, how news may or may not be related to what's going on. We'll delve more into socioeconomic theory, and it's all for free, guys. We'll probably post some trade setups in there as well. Probably a little bit of education, all that great stuff, guys. You know me, I always try to give out a whole bunch of stuff when I'm doing something. But the newsletter's free. I don't see any reason to charge for it. So join up in there, do all that. And as always, guys, howtotradetowin.com is where you can catch us, all right? If not, I look forward to seeing y'all next Tuesday, 11 a.m. Central Standard Time, where we'll again take a look at the markets, see how they have worked themselves up or not at the beginning of the week. And hopefully we can get some trading direction for the week as it progresses there, all right? Guys, have a fantastic day. Have a fantastic week. And as always, remember, the only thing you control in the market is how much you lose. That's it. So please keep working on risk management, all right? Take care.